Hi, and welcome back to the Wealth Clock. I'm Stephen Weinstock, and we are sponsored by my company, Wheat Capital, and the Wheat Capital Mortgage Fund. We're buying first position liens, doing bridge loans, anywhere from 3 months to 18 months, paying in the 11 to 13% range, monthly distributions, secured by first lien position, most of the time 65% LTV. But we're not here to talk about me. We're here to talk about real operators, founders, people making things happen. So I can learn from them and my audience can learn from them. Today's guest is Chad Schieler, the CEO of Focus Capital. Chad has invested in over 2,000 apartments. Some of them he's managing, some of them he's not managing. I guess we'll get into that. He's been around for quite some time. I'm sure you've seen him online. I'm just going to get to it, Chad. Thank you so much for coming. I appreciate it.
I see. Good to be here, man. This is awesome. Looking forward to
Okay.
it.
Before we start, just tell me, what does it mean to own some of them, but not necessarily be involved in some of them, or maybe involved is a bad word. Some of them you're running, some of them you're not. Just give me the different nuances, how that plays out.
Yeah, it starts back to my original journey in the real estate. I started in the real estate really for the tax benefits to offset tax liability I have from a previous business that I had in the past. And I chose the LP route of being a limited partner on some investments first, see how this worked. And that's carried forward even to today to where I'm still an LP on different projects that are a good complement to what I'm doing here at Focus Capital. So for example, things that are not multifamily like industrial or active adult communities, senior housing, that kind of thing. So some of that to leverage my personal cash flow, but the primary business we have at Focus Capital is to acquire and develop multifamily apartment complexes here in the Indiana area.
Got it. And what you said, you were involved in a different business, made some money, invested as an LP, and then eventually decided to focus on it and open up Focus Capital. And what kind of business were you in before, if you don't mind?
Yeah, electronic payments. So about 18 years, I was helping out business owners with their credit card processing systems, their accounts. Yeah, it did very well at that, but it's all residual business, which is nice, but you have a debate tax bill every year coming up. And back in 2017, I was like, we have to get this fixed here and figure out a way to offset those taxes and looked at real estate with my CPA. And he agreed as well that real estate could provide a lot of tax benefits for me with the appreciation and other things there included.
Yeah, real estate is a great tax vehicle. A lot of people get into real estate full time by first really just investing in it or trying to get into one deal. I started myself. I was a corporate guy. I was young, and my goal was to buy one single family home. I was still living at home with my parents, and I figured that after 30 years of paying it off and possibly making some money every month, I would have an extra 401k, so to speak, and I could sell that house and I wouldn't have to sell my primary or downsize, or I could afford to buy the condo in Florida, whatever it was. And it's really after a couple of months of actually owning it and the numbers are clicking and I'm seeing the 30-year payoff schedule. Every month it's a little more. It really got me thinking. And that's how I got to number two and number three and number four. And it became my full time shortly after. So you have a lot of people like that. And I like how you started on the LP side and you learned what it takes to be an LP, what to expect, who to speak to, how they speak to you, which is a great idea. So I'm sure when you started Focus Capital, you knew what to do and what not to do. Which markets are you in?
Indiana right now, it's our home base. Great market here, great state, but we're looking to expand to Ohio and Kentucky eventually as well. And back to what you said about investors, you definitely learn what to do and what not to do with investor communications, investor reporting, and how you treat them from prior deals.
You mentioned Indiana, just on a personal level. Does that mean you're in southern Indiana, or are you in by the Indianapolis area?
Both. So I'm currently located at Fishers, Indiana, which is nearby Indianapolis. And we've got assets that range from Lafayette to Fishers to Southern Indiana by Louisville, Kentucky.
Got it, got it. So the reason I ask is because even though I'm based here in Brooklyn, New York, me and my company do own and operate some multifamily properties in the Louisville area, in the actual metro area, which is pretty interesting. Maybe we'll meet offline in the future if you're ever in
Yeah.
Louisville, not Louisville, which I learned it's Louisville.
Yeah. They learn pretty quickly if you're a local there. If you say it Louisville, okay, you're disbarred here, right? But if you call it Louisville, then you're one of them, right?
Yeah, I've been down there probably about 75 times. Usually I'm there for 36 hours at a clip, checking on some assets, whatever it is. And so many times people will say, "Oh, you're a New Yorker or a Northeast guy." They say it friendly and nice, but it just reminds me that when I talk, I guess I have some sort of accent, or maybe I'm talking too fast or too slick. So
Yeah.
sometimes I have to be mindful of it when I'm meeting people and trying to impress people.
I used to drive down there for my previous business quite a bit, actually. I learned very quickly to call it Louisville, not Louisville, because the Midwest people here, they're a little slower, little not as trusting at first. So you got to match your audience there.
I hear you. A focus capital. So you are buying assets in these markets. You're buying multifamily.
Yeah. Multifamily, primarily 100 units and larger.
Okay. And as far as property management, collecting rent and dealing with the fuse that blew or a ticket you got from the city because somebody dumped garbage over the weekend, are you dealing with that at Focus Capital? Are you hiring that out?
Yeah. Not in house quite yet. It will be very soon. Right now, we use what we feel like are the very best third party PM companies. And we've got a couple of different ones. So we've got each PM company is going to be stronger in different areas. For example, Louisville, Kentucky, we've chose a company there that's got a very large presence that has a lot of employee potentials there, a lot of connections, a network to where they're actually better to be on site there at those Southern Indiana properties compared to up north here by Indianapolis. There's a different company up here that we use instead for that's better in this area.
Have you invested outside of these areas with, I guess, either with Focus Capital or just on your end on the LP side?
Yeah, quite a bit actually. I've invested quite a bit with my wealth management firm that brings me deals that are alternative investments. A lot of stuff out in St. Louis, Nevada. Not much, not anything at all actually in the Sun Belt. I've done 3 deals in Arizona. I said they were my first 3 LP deals out there. Kind of gave me the taste of how this all works.
Got it. Any of those markets that happen to treat you very well, meaning everyone has wins, some people have duds, hopefully you don't have losses, and everything's personal. Everything is this specific building just because of the way the wind blew. But any of those areas that you loved that was better than some of the others?
Yeah, so all of my personal assets have always been in Indiana. I've had some pretty big wins on stuff here locally. No losses at all as of right now, of course. Don't plan to in the future. Now, Arizona, I had a couple of deals there. My first couple of LP deals, they did very well. The third one, we missed the timing to sell it. So I'm still LPing the deal right now to wait for the market to turn back around. But it won't be a loss. I don't believe it will be. But the first two were really good. So that's a good synopsis for you there.
Yeah, I'm in a deal where I am the GP, and we have to hold it an extra 2 years. So you said before, missed the time to sell it. I'm just going to guess with the time that you missed was probably 22 or 23. And the next thing you know, you got to keep it an extra 2 or 3 years. That's how it happened with
Yep.
me. Any
Yeah, that
similar with you?
Yeah, that third LP deal that I did with a friend of mine, that was they were trying to sell it about 2022, and they had variable rate debt in that deal. It was a development deal, and luckily they were able to secure a recap with fixed rate debt and have more time, which that's what we need now is have. If you have time on your side, time cures most deals, but it'll be.
Right. I've said that many times when you said that time heals a lot of real estate issues. And it's just a matter of how long you're willing to wait. But I agree. Time heals a lot of mistakes and usually smooths things out.
Yep.
Yeah. Creative financing. I love to talk about it. It's helped me buy lots of real estate and lots of different assets. I started out very early using creative financing in order to buy when I didn't really have money to buy. And I've continued using it even now when I'm buying multifamily. Ever do anything creative, any creative financing that you were a part of, that you orchestrated, even as an LP, maybe they did it on your behalf? I'm just curious. I love to hear about creative financing stories.
Yeah, I actually have none of the all for you right now. I've either self-funded all my deals or I've raised capital from investors to be LPs. As of right now, I've not yet had a seller finance deal or seller carry or creative finance deal That isn't a change though. I have learned a lot more about creative financing. So I believe I'll use that if it's a personal assets going forward. But I'd love to hear about your story too on how you use that in your assets.
Sure. Just to give an example, when I was buying one to fours, I spent about 10 years really focused on that market in New Jersey. New York was just untouchable. So I had to cross the bridge, cross two bridges to buy some real estate. And right away, I would say in my like third or fourth deal, and I was buying fast. I was back then, the lending and the credit was very easy. This is 2001. So 2001, 2002 was a very good time to buy, easy time to buy. And the banks itself, the banks themselves, or the brokers who work for the bank, who work with various banks, when they would offer me loans on a two-family house that's costing me 85,000, they would offer me an 80% loan and then a second loan, a second lien position with a different bank and a real bank for 15%. So I would have to come down with five. When I started doing those deals, I would try to ask the seller, would they hold the five? And maybe the 5% I would pay out over a year. And I started, it was really just thinking about it and asking other people. And there was no online really back then, but there were these tapes and CDs and all that type of stuff. Carlton Sheets was one of them, Robert Allen.
Yep.
I never bought, but I used to watch these infomercials that were on TV. I'm not sure how old you are, but in the 90s, at least, there were these infomercials like after 2 a.m. There was no
Yep.
more programming on Channel 5. So you'd have these 45-minute commercials, either selling blenders or toasters or sometimes real estate books, stuff like that. So I used to watch these and they used to talk about it. I would read about it. And so just to give you a rough, I bought tons of one to fours using some sort of seller carryback. I've done quite a few master leases where the person's got a great loan and let's say they have 300,000, let's say they have 100,000 equity. I would offer them 25,000 equity down payment, keep the loan in place, do a master lease on the entire property. So everything I'm running, etc. Have lawyers fill out some paperwork about if I'm paying the bill, the loan pay down, that part of the equity comes to me at the eventual sale. Do this for a year or two and then have enough equity or it's cheaper, but it's 2 years later. So get a new loan and try to knock the seller out, try to knock out his loan. So I've done quite a few master leases. And even in one of my multifamily deals, I got a seller to keep some of the money. We needed about 4 million for the deal. And he agreed to stay in for about 1 million. And that was me asking. It was a big national brokerage firm. It wasn't offered. It wasn't spoken about. And I put it on my LOI and we got it done.
I think the point there too is you have to ask for it because a lot of these brokers, they're not going to suggest to the seller. But in this day, it's like to get deals done, if they want the price, which is probably higher than what the current buyer's willing to pay, they have to get creative. They have to maybe give up something else, maybe at least some money in the deal at a certain rate. But I love what you've done so far. It's awesome. I think for me, it's to look at these deals to where the way it works is if you've got a deal that you can force appreciation rather quickly in the first year to 2 years, it makes sense, right? Now, can you afford to pay the debt service on that extra note in the meantime with the cash flow on the property? Can you get out in a year to year and a half and pay off the seller's note? Then it makes sense 100%.
Yeah. Yeah. Creative financing is great. Typically these days when I send an LOI, there's multiple offers on it, some sort of creative financing. Both, even in the multifamily space, I'm still active in the one to fours. So there I'll always put 3 offers. I'll put a cash offer, 21-day closing, proof of funds, non-refundable deposit. And in the one to fours, that's non-refundable deposit's a big deal.
Yep.
Then I'll put an offer with regular bank financing, 25% down and regular 60-day closing. Or I'll do a higher offer or a full price offer with some sort of seller finance component to it. So depending on where the seller is, sometimes they like that higher number. And I tell them that it should be beneficial on your taxes when you do some sort of seller carryback because you're spreading out your gains on multiple years, tax filing years. So yeah, it's definitely a matter of just putting it out there. And you're correct. A lot of brokers don't like to hear it. I've had my back and forth with brokers about it, but then you have a lot of them that are all for it.
They don't understand it usually. It's usually an education piece for these brokers to understand how it actually works, how it can benefit the seller. The question for you would be, okay, so we know you're in your cash offer, what that would be, how it would look for you return wise. We know on a bank finance deal, how do you arrive at your calculation on that third offer? Basically saying, okay, I'm going to pay a little bit more in price than property, but I want X, Y, I want a certain amount held back from you at a certain rate. How are you calculating what the increase in price is that you'll give them, what that seller carry amount is, and what the rate is?
So it's a good question. And on the smaller deals, more, I don't want to say eyeballing it, but I'm figuring out that if I get the seller to stay in, I'm usually saving some money in fees. So those fees annualized or all that comes out to X. And if I can get the rate for whatever I'm paying him to be, let's say, the same as my first position lien or same as what a first position lien would cost at a decent rate, it usually means it just makes it easier. And worst comes to worst, I have the money still in my pocket. I could afford the emergency. I could afford if something doesn't really come to plan, I could afford to fund it because I didn't put that money up front. Every deal is different. And a lot of the reasons I try to do a seller financing is I try to have a relationship with these people who I'm making a monthly payment to and trying to create a relationship with them where the next time they're selling a property, they're calling me already or discussing some sort of seller finance component. So I've had that happen quite a few times. You do a deal with a guy and he calls you out of the blue and says, "Hey, I got this other property. I'm fine with the monthly payments. They trust me. They know me. I'm speaking to them every month, or they're getting a positive transaction from me every month." So I've benefited from my relationships with these people. And I would like to think that all that outweighs any potential increase in my monthly expenses by doing it that way. That's really how I come to that conclusion for the third offer.
Yeah, I like that. There's a deal I actually had last week that I'm looking at, and I'm looking to give them two offers on it. Like one is just a straight offer using bank financing plus equity. And the second offer would be, okay, you leave some money in the deal. I'll give you your price that you want, which would be a 500K extra in this property. It's about $7 million, about 500K extra. But the question is, what's the appropriate amount to ask him to leave in the deal? What's the percentage rate? I think percentage rate may be closer to that 5-6% range, but I could ask them to put in $1 million or $3 million. What's the right number there? Lowest cost.
Indiana, is that where you're born?
Indiana, born and raised. Yep.
Born and raised.
Lafayette, Indiana, near Purdue University.
You ever think about investing in the Northeast?
I never have, man. I never have. I've always been a fan of investing nearby where I live. At this point, we can be there a couple hours. That's part of our thesis is like we're within a 3-hour radius where we live right now. And I feel like as we get a larger team, we can branch further out to where it's to me easier to get to a property same day, get to fly there and fly back. It just takes longer as with your Kentucky properties. But there's still the old adage of live where you want to live and invest where you want to invest, which may be at every state.
Yeah, you have tons of investors all over, even Arizona and Salt Lake City, with most of the capital stack on the LP side is coming from California. You
Yeah.
have that.
Same way
And
too. We have a lot of investors on the West Coast and the East Coast because they don't like the cash flow or lack thereof in California. They love the appreciation sometimes, but the laws and regulations are getting a little tighter over there. So they look at the Midwest as a way to get more cash flow, more of a steady eddy kind of thing with less risk of laws favoring more the tenants versus the landlords.
yeah, buying in New York or the Northeast, you'll probably do well on appreciation for the most part. You might not cash flow ever, but you're definitely at whim of regulatory rules that come down the pipeline. In New York City specifically, 2019, there was some sort of rule change where you can't increase rents even if you
Wow.
renovate the apartment. So if an apartment needs 50 grand worth of work and you can't raise the rent from where it was, people are keeping the apartments empty. It's leading to other problems over there. But for some reason, the value of these buildings just keep going up and up. I think you have a lot of people with their own capital or just big funds, money, they want to park it somewhere They're fine with 5, 10, 15-year holds if they have to. And typically New York or the Northeast has paid off when it comes to appreciation. Any books you're reading? Any books you've read
Yeah.
besides
Yeah.
the Hardy Boys?
I just finished a book by Chris Voss, which is Never Split the Difference. It was probably the best I've ever read about negotiations. It was great. Now I'm reading a book called Pitch Anything. Always been a fan, of course, Robert Kiyosaki's books, How I Got Started in Real Estate, Rich Dad Poor Dad. I love the Dan Sullivan books. Those are great. But usually I'm reading, I'd say a book a week, usually a book every 2 weeks.
Oh, wow.
Audiobooks.
Oh, wow. Oh, wow. Okay. So you definitely have a good library on your Apple device.
Always learning, man. Always learning.
What is one habit that successful investors have compared to ones who struggle?
I would say, I would look at myself. I'd say one habit that I've done over time is always do what's uncomfortable. And with investors, I think like risk is a muscle, and it's getting used to that muscle and getting used to knowing that you'll never have 100% of the answers, or you can't ever mitigate all the risk. There's always risk in investing, but it's figuring out how can I mitigate the worst parts of the risk and have a much greater upside potential than what the downside potential is. So I think in terms of habits you can form as an investor is just reviewing more deals, doing more deals personally, and just getting used to that. Because I think a lot of investors, they get stuck with the risk piece and they look at a deal, they analyze it a million times, and they just don't get comfortable, or they can't make a decision to move forward because there's still unknowns. And like in business investing, there's always gonna be unknowns. So my mentality is like, if you have 85% of the answers, just go ahead and do it.
What are some of the biggest mistakes that LPs make getting into a deal?
The number one thing the LPs make is they compare an IRR percentage on deal by deal to make their decision. That is the biggest one. I feel like they don't do enough deep dive into what makes up that number. And they rely more on making an investment decision on the actual deal itself than the operator. And as you and I both know, operations means everything. You can buy a great deal. If you operate it poorly, it's a bad deal, right? So you have to look more into what influences the IRR assumption. There's a lot of levers you can pull. You can pull exit cap rate, rent growth, vacancy, all this stuff. And I think you, as an investor, you've got to look more at the operator. Who is a person doing this deal? What's their track record? What's their experience? What's their presence in the market? How close it is to them personally? What's their skin in the game? So that's a few things.
Ever deal with agency debt, CMBS loans? Do you like them? Do you not like them? Credit unions, what do you like? What don't you like?
Yeah, I did only bank deals, only fixed rate bank deals up until March of this year. And now I've done 2 Fannie Mae loans. Everyone says the process is terrible. It wasn't bad for me. It was only bad the last deal because we had a symbol loan. The deal was built in 2 phases. We had to do 2 loans to Fannie Mae. We had a foreign national TIC investor. So we had a lot of firsts on that one deal, but overall, I think it's worth it. You get a great rate, great terms. It's non-recourse, which is awesome. But it was a lot of paperwork, a lot of due diligence. But once you're in, once you get the first deal done, get through the FCRA questions, the PFS questions, and the background, and they really, but once you're in for the first one, you're in going forward.
Chad Schieler, thank you so much for coming on.
Yeah,
I had a great time talking to you. I'm going to put in the show notes, but tell everybody here how they could reach you. Are you on social media? Should they call you? Should they email you? What you're working on? Let's hear it.
Yeah, thanks, Stephen. I'm on social media. I'm on LinkedIn primarily. You can find me at Chad Schieler or at Focus Capital. Our website is focuscapital.com. Go on there, fill out a form, get to know us a little bit better. You can always email me directly at chad@focusedcapital.com. As far as projects, we don't do a blanket fund. We do just deal by deal, single asset fundraise. Nothing right now. We're very selective. We've put over 55 offers this year and so far. Did 2 deals. So it's a lot. It's not a very good numbers game there, but should be next year having the next deal coming up.
If you found value in this conversation, subscribe to the Wealth Clock with Stephen Weinstock podcast, YouTube, Apple, Spotify, everywhere, to learn more about my We Capital Mortgage Fund, where we help investors earn consistent income on short-term first lien positions, please reach out to me directly. Find me on my social medias, DM me. Chad, thank you very much.
Thanks, man. That was great. Good
All right.
stuff.